Hello everybody, Simon Dixon here again, and today I wanted to give a brief update on the implications from the New York Attorney General's office response to the Bitfinex and Tether situation and the ongoing case. Now, this one isn't actually going to focus on the intricate details of the case, because I've actually given my perspective on that in other videos. So if you just do a quick YouTube search for Simon Dixon, CNBC crypto trader, Bitfinex, it should produce some of the interviews I gave on CNBC. And if you just put Simon Dixon Bitfinex, I'm sure you'll find other things there as well, which actually outlines some of my thoughts on the case and my perspective. Now, just before I go through this video is actually talking about the implications on you rather than commentary on the Bitfinex case and how it might affect both your Bitcoin positions and also Facebook's new cryptocurrency, because I believe that this is all about a jurisdictional argument and a power play. And I'll go through some of that in this brief update. Just before I do that, I should disclose that through banktothefuture.com, I am a shareholder in both Bitfinex and Circle, who indirectly mentioned in this video. So just want to make that disclosure before I actually go through the content. So what's happened now? So I don't want to go through the whole case, as I said, but in a nutshell, the New York Attorney General is looking to take jurisdiction over Bitfinex in order to gain additional information on the Tether situation. And there's an ongoing back and forth dialogue, but it now comes down to a jurisdictional issue. And what is really fascinating and interesting and has vast implications is how the US is trying to get jurisdiction. And the way they're doing that is via the fact that the stable coin has been used by people in New York, and the implications that actually has and how that is overreaching, and we'll see what the result is of that. So the way that they've actually drafted their argument and case is they're using some of the businesses that are regulated in the US, for example, Circle. And Circle has what's called a bit license, which is a regulatory registration to do business in New York as a cryptocurrency business. And they acquired an exchange called Poloniex, which is a crypto-to-crypto exchange. It doesn't intersect with fiat currency, but it uses Tether as a mechanism for people to, peg their fiat value to a cryptocurrency, pegged to the dollar, and then trade against other cryptocurrencies. Now, because Circle is registered as with a bit license, and they acquired Poloniex, then the US is using the data that they have there to show that there were IP addresses that came from New York that were using those exchanges and own Tether and use Tether. For those of you who don't know, Tether is a cryptocurrency backed, pegged to the dollar and backed by dollars. And the case is all about that, so I don't want to go through the details on that. That requires a different line of thought and trail. But the implications of that are that if anybody uses a stable coin, then the US are trying to test whether they can use that to take jurisdiction over the company that was issuing that stable coin. Now, the implications of that is kind of like the US taking jurisdiction over you if you had some US dollars in your pocket. So if you used US dollars in any capacity, or you had US dollars in your pocket, then the New York Attorney General is setting a precedent that they actually want to take jurisdiction over what you do. So the implications for this are when it comes to Facebook. So Facebook is going to launch their new cryptocurrency, and governments, central banks, everyone around the world is going crazy about it. But really, why I think the US is going to allow this to happen in the end is because Facebook is a US company, and the government obviously want a backdoor to Facebook, which gives them access to the world's data, or whoever is using Facebook. And so if the Facebook launches their own cryptocurrency, which obviously are the know your customer kings, they know what time you go to the toilet, they know everything that you do. So the fact that they're trying to make anti-money laundering arguments against Facebook just shows that this is a power play and nothing to do with whether they can whether terrorists are actually using Facebook's cryptocurrency that knows everything about everyone and the government use in order to try and get additional data. The implications is that the US can now use Facebook's cryptocurrency to get a backdoor to everyone in the world that wants to use that Facebook's cryptocurrency. And so really Facebook can be used in order to actually bring, if this case goes through, bring everybody that uses Facebook's cryptocurrency, and maybe even the US try to go even further and say anyone that uses Facebook under the jurisdiction of the US, so that they can exercise their influence and collect their tax on the world. So you can try and call that a conspiracy theory, or you can say that I'm putting on my tin hat. But that's what the implications are of this. So just taking this a step back. So Bitfinex and Tether are operating outside of the US now, but they're saying that if anyone has used Tether from New York, then they're claiming that this puts them in the jurisdiction of New York. And they're using the exchanges that are regulated in New York in order to get data on whether someone from New York is using that cryptocurrency. And then they're using that as a case in order to claim that they can take data over exchanges that are allegedly not working with US customers, not jurisdiction in the US. And they're using that as a way to try and get the data that they want and claim jurisdiction. And so what essentially Facebook is going to become is, essentially US jurisdiction on steroids, which in the end is going to drive much adoption to Bitcoin, because as we know what happened with PayPal, PayPal started with a great goal of trying to bring financial services to the world in an easy way, and allow people to make transfers in an easy way. But then the regulations step in, and then because of regulations and the broken banking system and chargebacks and the way that the system works, people end up having their money seized and held for 6 months while the banking system tries to figure out who owns that money, and all these centralized databases all around the world that are trying to figure out who's got jurisdiction over that money and which person has it, and you end up not being able to access your money for 6 months, and then at the end of it, if you dispute it, you get banned, and you have the situation that PayPal started with, having a perfectly noble goal that ends up into a banking nightmare that causes problems for everybody. Well, the same is exactly going to happen with Facebook's cryptocurrency, and it's going to be on steroids, because they've also got all of your data and everything that you've given to it in the past. Then they're going to use that data in order to block your transactions, do everything that they have to do in order to remain compliant with, these anti-money laundering laws, the know your customer laws, and everything else that comes with being a financial services operator. But then people are going to realize that actually this gives the perfect use case of why I should own my own money. And Bitcoin gives you the only way to own your own money, spend your own money, and have an independent monetary policy that's not dependent upon government policy. And so really in the end, again, everything points to the same theses, and this is another case of how these power plays are going to be driving adoption in Bitcoin. and giving people, decreasing the user experience of using traditional fiat money. But because people have an exit, Bitcoin becomes this force that can regulate the regulator, whereby if their policies get too far out of control and people have a choice, then it's going to lead to an exodus out of their fiat currency or their system or Facebook's currency or whatever it's going to be, as we have these different competing currency systems now that we live in a completely new world. So the implication of what happens with whether the US can take jurisdiction over Bitfinex and Tether as a result of someone in New York using Tether through one of their regulated exchange is far-reaching. The implication that has on Facebook and whether it will go through are that if the US can prove that we can take jurisdiction over people based upon the fact that they use this cryptocurrency, means that we should allow Facebook's cryptocurrency, because then we can bank the entire world and have a backdoor into Facebook. And the fact that will happen is my forecast, because the US will realize that is a great way of getting jurisdiction over more people and more data. Means that's going to be driving Bitcoin adoption, and another reason why I think that the Facebook cryptocurrency is actually going to shake up the world in one of the biggest ways that we've ever seen, and drive Bitcoin adoption in a way that we have never seen before, as the world starts to realize the importance of owning your own money, being able to spend your own money, and understanding that when Facebook coin is priced against Bitcoin, they're going to see that their savings are depleting in value because it's stored to a basket of fiat currencies or whatever it ends up being in the end. And Bitcoin has that fixed money supply that's independent of politics, that can never be changed. And the importance of why Bitcoin is so different from every other type of cryptocurrency, because those things are very, very, very hard to change, and are very sticky. So these little things have bigger impacts, and that's it. I'm going to get back to work on working with companies, trying to change the future of finance. Let me know what you think. Please retweet, please share. I'll try and upload this on some of the other Facebook and Google as well. And yeah, look forward to seeing your comments and what you'd like to see next. I'm going to get back to work.